Hello, everyone. Welcome to the panel Startup Competitive Advantages. I am Fernando Moreno, the Director of Startup Success here at Newchip Accelerator, and I will be leading this panel. Today, we will be talking about the need of having a competitive advantage to be successful in the startup world, and the need of having a strategic plan centered on these competitive advantages. Without further ado, it is a great pleasure for me to introduce our special guests that are joining us today. As I was speaking with Ian and James, they were two of the first people I met when I joined Newchip Accelerator, so I'm very happy to have them here. Our first guest is Ian Garrett. He is an associate director for Ideaship, an early stage patent capital fund that has invested a few times in companies from Newchip. Ian is responsible for business development, investment sourcing, day-to-day operations, and system development. Ian is a mentor with the 5 Ventures, a nonprofit working to shift mindsets to give people with criminal histories their best shot at a second chance through career readiness, personal development, and entrepreneurship training programs offered in prisons and in the community. Our second guest is James Irvine. He is a partner at 305 Works, a startup agency that provides valuable tools and education to founders to help them build and scale profitable companies. The founder of Pitch Night, a company that organizes monthly pitch competitions, the Florida chapter director for Founder Institute, and a business consultant at Global Accelerated Ventures. In addition to all of these, James is also one of our pitch coaches at Newchip Accelerator, so he knows a lot of our companies and the issues that our companies are facing. Let's jump into the different topics we're going to be talking about. I would like to start by drawing on your knowledge and experience regarding the competitive advantages in different business models, right? So to kickstart the conversation, the first question I have for you is you review dozens and dozens of pitch decks every single week. When you are reviewing the product, the industry, the business model of each of these companies that are reaching out to you, what is a significant competitive advantage when compared to their main competitors? When do you decide that this main differentiator is actually a value added for that particular company? Ian, maybe we can start with you with the venture capital perspective.
Absolutely. So, for me and Ideaship, we're mainly investing in the seed stage. And the seed stage, you don't have as many indicators for which of a particular competitor actually has the advantage. And it's, to some extent, some guesswork. And I think a lot of that is because, unlike in later stages where you can see significant traction or revenue when you're analyzing a company, a lot of the time that's just not present in the seed stage, or it's not really telling the whole story. So for myself, I'm usually looking for a combination of indicators to gauge, if a seed or if a pre-seed company is likely to have that competitive advantage. And I'd say high level, the indicators that I'm looking for has a lot to do with the founding team, how much relevant domain expertise they have, if they have any previous exits. I think really track record is one of the best ways to differentiate competitive advantage in the pre-seed seed stage. And then more specifically to what we at Ideaship focus on, which is patents, I'm looking at the novelty of the technology as the primary differentiator. The reason being is because through our investment, we help with patent development strategy and actually leveraging that for fundraising. So for us, the more technically differentiated a solution is, the more that we can help build out that competitive advantage. And in a nutshell, what that looks like is, I want to see a technological implementation that's novel and that we can carve out the broadest claims for, meaning that we can seek patent protection in such a way that we can block out alternative solutions, even if those alternative solutions aren't directly the same. So short answer is it's tough in the seed stage, but generally I'm looking for founding team's track record as well as the ability to carve out broad patent claims for the company's technology.
Terrific. I just want to add a follow-up question. What happens when the founder maybe has a track record of success, but on a completely different industry? We see some serial entrepreneurs that are starting a company, having an exit, maybe in the software side of things, and then moving into retail, for example. Are you still interested in this type of founding team?
Ultimately, the founding team isn't a make or break for me because we are so focused on the patent side that, if a founder has had success, even if it's not directly aligned with what they're working on now, I still think that can be a strong indicator and is certainly preferred to a founder that has no track record at all. So.
Sounds good. James, I want to hear your thoughts. When do you decide one competitive advantage, or at least one differentiator that the founders are saying is going to be the most important thing of their business model is actually that competitive advantage we're looking for?
Yeah, great question. So to echo a little bit of what Ian said, at the earlier stages, it's a little bit harder. So team and IP come into play a lot. So following up to your follow-up question, right? If there is a founding team that comes from the industry and they have really deep industry knowledge in that space, maybe they walked away from a Fortune 500 company where they worked and they identified this problem and they're now building the solution. That's a good indicator that that competitive advantage is real because they know about it, right? You kind of rely on that industry expertise. For people who don't have that industry expertise, what we see a lot of times is things like, oh, we're going to compete on cost, or we're going to compete on speed. We're small and nimble, they're big and slow. Those are usually a little bit weaker, and that's where you have to really dive in to ask some follow-up questions about what it is about that process, right? So there are some weaker competitive advantages and some stronger ones, and IP is probably enforceable. IP is probably the holy grail of competitive advantage. But then there are some other, stronger ones, such as, supplier relationships, if you're able to lock in unit costs, or if you're able to lock in customers that, it's a very sticky product, like things like that are generally good competitive advantage things that you can add to your deck.
As a follow-up question, James, is how do you evaluate these expected competitive advantages when you're talking about a pre-seed or a seed company that barely has some traction in terms of revenue, connections with suppliers, etc.? Maybe it's a competitive advantage they are thinking of having maybe in the next 5 years, but
Sure.
Still, like they do not have these connections. They still do not validate that they are going to be faster or cheaper than the competition. How do you evaluate them?
Yeah, so because I'm not an active VC, I don't do a ton of deep due diligence, but I can weed out, I think I'm pretty good at it. I can weed out most of the good ones from the bad ones just with questions. So like I said, kind of diving in, having them explain the process, what they've discovered, how they learned these types of things, how they saw this opportunity. You can get a lot out of that just with a few simple questions and see how sharp their answers are, how knowledgeable, how thoughtful the answers are. And then generally kind of knowing where the industries are and where they're headed is also very helpful, right? If they are saying that we're going to use, social to sell and get access to these customers because the big competitors aren't really doing it, then, maybe that works in the short term, but social's really been here for a while, right? It's not a new novel approach. So, I had a company that I saw recently that is monetizing heavily on Discord, right? That's a little bit newer. So they're really building a competitive space and a competitive landscape on Discord, that being one of the newest social platforms, right? So, things like that, where if they're a little bit ahead of the curve, kind of knowing where the industries are moving and what the trends are, that's one way as well to really get a good sense of, is this going to be a competitive advantage actually, and for how long will that competitive advantage potentially stay?
Correct. And moving now, how do you share that competitive advantage, not only with obviously with your customers, but also with investors, right? I as well as you review hundreds of pitch decks, and probably the slide that gets more attention, at least from a competitive advantage standpoint, is when you are comparing yourself to the competition by numbering a list of characteristics that are at least different from what your competitors are doing. What would you recommend for actually sharing not only the characteristic, but the benefit for the end customer, for your user? Because at the end of the day, it has to be customer centric. If it's not a competitive advantage that it's really attracting your user base or your customer base, it will not have that impact you are desiring, right? How would you share these with the investors in this case, which in most of the times are industry agnostic and they do not know about your specific sector, right?
Yeah, this is a tricky one, because slide decks are supposed to be very slim and high level. And as we've just kind of alluded to, competitive advantage usually takes a little bit of a deeper dive in most instances. So the two typical slides are the XY cross, where you're in one quadrant and everybody else is in the other quadrants. And the other one is sort of the grid, where you have a handful of features and benefits that they don't have, and you check all the boxes. Those are simple representations. They don't do exactly what you're kind of alluding to, unless you label them very, very well and have meaningful, differences on the axis or in the grid. One deck that did a really good job of highlighting competitive advantage that you guys can all Google is Warby Parker. They, for those that don't know who they are, they're a sunglasses company, or they do sunglasses, prescription glasses, all of that, and kind of disrupted Luxottica, which is a major player in the space. And they have a lot of good examples of how to highlight competitive advantage in their deck. So I encourage everybody to take a look at that. Plain and simple, you just have to spell out the important parts very clearly and simply. So if you have a supplier relationship that is, exclusive to you and at a unit economic cost that's better than everybody in the industry, just put it on there. It's simple. Like, we have a signed contract with XYZ Manufacturing for 5 years for, at $2 a unit, compared to industry average of 5, right? So, that's probably the best way. And then if it's, I'll turn it over to Ian. If there's patents and IP that come into play, maybe he can talk a little bit about how to best position those.
Definitely. The next question was actually for Ian. How basically are you evaluating these competitive advantages, and focusing specifically on what James said a few minutes ago, is how do you validate that the intellectual property protection that they have through a trademark or a patent is actually enforceable. It's actually protecting something that is worth the time, money, and yeah, and usually the entire business model runs behind protecting this intellectual property, right?
Yeah, so I think that's a really great question and a good, specifically your point around the business model being in line with the patent strategy and the patent portfolio. That's one thing that I'm really evaluating for prospective companies is their patent portfolio as a whole. What we typically like to see is a slim and lean but high quality portfolio, meaning that, let's say, by the pre-seed or the seed stage, they have maybe one non-provisional patent and additional provisional that they're looking to convert. I think it's almost easier for me to describe what I don't like to see. So really bloated patent portfolios are a good indicator of a competitive disadvantage in that, typically in the really early stages, if you have several discrete filings, you're going to have a hard time taking all those through the USPTO prosecution cycle. And if you are able to have those granted, then you're going to have to continue to pay maintenance fees. And it's in the earlier stage, more patents, I'd say, is generally a bad thing as far as volume goes, because ultimately you can achieve the same result, but in a more staggered way to help maintain your finances. And then file as you raise more money on all these separate applications. But generally what I'm looking for is smaller, leaner patent portfolios that are directly aligned with a company's business plan. So meaning that if you look at their technology roadmap, they should have their key filing dates built into that. They should have a very clear idea of, okay, this patent supports this aspect of the business. This is why we spent the money to file it. And this is what we plan to do with it over the years to come, whether that's taking it into the international stage or leaving it as is. So, back to your original question on sort of the competitive advantage and actually validating, the strength of those patents, it's really hard to explain in a high level sense because patent drafting is so nuanced. But I'd say generally, we identify quality as when a patent has the broadest possible claims while still being allowable. So, a lot of the founders will brag about how, our patent made it through the USPTO without any office actions. How awesome is that? Whereas the reality is you want the process of pushing your application through the USPTO to be lots of office actions back and forth. It should be a push-pull, because otherwise you're not really carving out significant enough protections, which is why the USPTO is telling you, sure, everything's allowed. Why not?
Definitely. So focus is important. And another question is, obviously, again, you're industry agnostic. How do you evaluate the validity of the patents if they are actually protecting something that is worth protecting?
Yeah, so that's a good question. In the earlier stage, ultimately you can't be certain that what is being protected will ultimately be valuable. Like when you're assessing something when you're assessing a startup, sans the patents, there's uncertainty if what they're building will actually be valuable. So the value of the patent is largely carried by the value of the business. There are instances where, startups will sell patents, but ultimately for how much you typically spend on filing and maintaining that patent, unless you can create value for the associated patents through expanding your business and, really taking to market whatever's actually patented, then the patent value is questionable. So when I'm evaluating a startup, the question is more of, okay, is this patent technically sound? Are the claims sufficiently broad? And is this aligned with the competitive advantage that this, is startup
with the entire business model in this case? Yeah,
exactly.
Terrific.
So,
And James,
they're very much one and the same.
Yeah. In addition to that, I want to follow up with James on this. We were talking about patents, very specific things about your product. How do you evaluate, in your case, James, the validity of the entire business model as a main differentiator and as a competitive advantage, right? You were mentioning maybe the relationship with suppliers, maybe that you have more streamlined processes that allow you to reduce costs. But obviously, you need to look at the big picture and see if that business model will first capture clients and customers and eventually become a source of profit, right? How do you evaluate them in these early stage startups?
Good question. So it's tough to evaluate at the early stage because a lot of the competitive advantages are competitive advantages at the current stage. Mm-hmm. So we see a lot of startups that, when they're at the pre-seed or seed stage, maybe they're a marketplace and they have a competitive advantage because they're local. But as you roll that out to, 100 cities, that starts to go away. So really, again, it kind of comes down to what type of competitive advantage it is, and if it scales with the business model, mm-hmm. right? So to use like the Warby Parker example again, yep. They had a competitive advantage on their inputs and their profit margins. That scaled with them the whole way, right? IP scales with you the whole way. Things like we're going to offer better customer service. You have to continue to deliver on that, right? Costs, you have to continue to deliver on that. Supplier relationships, you have to continue to deliver on that. So
that's super important. Just to touch on the suppliers, and because at Newchip Accelerator, a lot of companies are international. And yep. They sometimes think that they have, so for example, a great relationship with their local supplier. They are able to get like their products really cheap, and they are selling them at competitive prices in their current market. And when they are trying to expand to other countries or different states, then they find this blocker of not having the suppliers there, having to do some type of export and the need of paying additional import taxes. Yeah, definitely is one of the things. I just wanted to highlight this because sometimes they think it's every competitive advantage and every characteristic of their business as it is right now is scalable, and it's not always the case, as you mentioned it.
Yeah, great point. I mean, very few of them are super scalable. You have to, really look at the founding team. Again, it really comes back to the team. If they are savvy at identifying competitive advantages and exploiting those, then they probably will continue to do so. But If not, then most of the competitive advantages like speed, like costs, like inputs, those generally disappear as you get bigger.
Terrific. Next question I have for both of you is, what's your opinion on NDAs for basically protecting their still baby patents or trade secrets? Like, obviously in your case, James, you are an advisor, a consultant, a pitch coach. First, do you get requests of signing an NDA before getting access to this information? Second, do you sign them? And what's your opinion on them? And Ian, I want to jump in a few seconds to you as well.
Yeah, so good question. I do get NDAs occasionally. I generally don't sign them. It's a little insulting to think that I would rip you off and spend the next 5 years of my life trying to build what you're going to build. Most people, are not going to do that. So I think NDAs are kind of a waste of time. I know almost every investor I've ever spoken to, they won't sign them because they can never realistically keep track of that many. And I will say this, when I first started in the startup industry, I used to get NDA requests all the time. Nowadays, it's pretty rare. So I think enough people have gotten on the horn, talked about this subject, sorry, Fernando, that most of the listeners now are not using these as much as they used to. But yeah, an NDA also throws up another red flag, and that is if it's so easy to knock off that you can't tell me about it, is it a good business model? Is it a good business idea, right? The only time I think NDAs are really appropriate is if you know you're walking into a situation where the people have a foothold in the space that you're in, and you're about to really go into the nitty gritty, like you're about to open up your code and show them what you actually programmed, or you're about to show them the contracts you negotiated with your suppliers, right? But if you're going to like a general VC, then it's really not necessary. They're not going to leave their job and tell their limited partners, sorry, I'm going to start this startup. Like, it's just not going to happen. So generally useless.
Thank you. Ian, let's jump into your point of view regarding NDAs, and specifically, obviously you get a lot of pitch decks. What type of information should a founder include on the pitch deck in terms of how detailed they should put everything related to their patents? Second, do you sign an NDA when they are giving you access to their patent documents?
Absolutely. So, I think this is a really interesting point, and I think James is spot on in that 99% of the time, nobody's going to leave their VC job to rebuild what you're doing from the ground up. From a patent perspective, I think this is where things sort of diverge as far as NDAs go. So in the United States, you have 1 year from when you publicly disclose an innovation to file for patent protections, meaning that once you offer an item for sale or you explain your secret sauce to somebody not under NDA, then that 1 year clock starts. You don't need it to file a full non-provisional patent within that 1 year. And what I recommend to a lot of people is, if you're concerned about needing to at least somewhat describe your secret sauce in order to attract investors, make sure that you keep track of the first time that you do that, and make sure that you file a provisional patent within that 1 year. You can file a provisional patent fairly cheaply, and it essentially extends a full another year for you to convert that into a non-provisional. So in that capacity, I think it's more about being aware of when you're disclosing not under NDA than it is about only disclosing under NDA. Because as James, pointed out, the industry standard is that VCs won't sign NDAs, and it's certainly not gonna make a good first impression when you're moving into due diligence or something of that nature and you're insisting on an NDA. You're really, especially in the earlier stages, you don't want to risk that relationship with an institutional investor, that you've been developing for fundraising. So generally, I think it's more just about being aware of the ramifications of disclosing not under NDA. For Ideaship specifically, because we're taking such a close look at the surrounding patents when we're evaluating a startup for an investment, we do sign NDAs, but I'm aware that we are the fractional minority there. So,
Okay.
yeah.
Because your area of expertise is investing in these particular type of companies.
Exactly.
But for, and again, this is for all the viewers, it's not only Newchip that is saying it. Like, please do not ask for NDAs to your investors.
I mean, you can ask, but
you can always ask, just
you might
don't
not get
pushy.
the reaction that you're looking for.
Exactly. So
if you're not a science or a deep tech company, probably shouldn't ask. It's probably not even worth it. So
terrific. And lastly, before we jump to the next section of Online Demo Week, we want to ask you, what would be your most important recommendation regarding competitive advantages to an early stage founder? How to protect them, how to use these competitive advantages to grow their business, or basically how to sell themselves in front of an investor?
sure, I'll jump in there. Yeah, I mean, I think the first piece starts with being aware of what your competitive advantages are, right? Maybe taking a step back, asking some of your colleagues, asking some of your customers what you do well, things like that, just to get a better sense of some of the other competitive advantages you may be overlooking, right? And then, again, putting them down very clearly for your investors, either in some formal write-up in the business plan or just a slide in the deck if necessary, however you're going to be, using materials. And then as you're growing your business, obviously this is tricky and very, very case by case. But again, you really just want to keep in mind what it is that's going to set you apart and double down on that and really use that in your day-to-day. Make sure that you're using that in your, in your growth plans. And, I think that's one of the hardest things to do is to differentiate yourself in today's game, because there's so many startups. Technology is so cheap and abundant. So a lot of competitive advantages are kind of neutralized to a certain extent, because everybody can move fast and cheap nowadays. But again, it comes down to the founders first, right? Are you guys in and of yourselves the competitive advantage? You know how to find competitive advantages and exploit them. So really just being very introspective, taking a look at what you do well, and kind of organizing that into a cohesive business plan of attack is the best way to go about it.
Terrific. Ian, your number one recommendation, and in your case, could be very specific to the companies that are filing patents.
I will keep it specific to that, just because I think
Perfect.
James did such a perfect, succinct job of describing all of the other case. So I will weigh in where I can. But for competitive advantage as it pertains to technological innovation, which is, really what I'm focused on 99% of the time. My biggest recommendation is if you suspect that you're doing something novel and you expect that novelty to be one of your primary differentiators, start exploring patent protection as soon as you can. A lot of people fall into this trap where, you're in the pre-seed or seed stage. And obviously as a founder, you're doing 1,001 things and it just feels like IP's one of the items on the back burner. And, the reality is that you don't need a ton of money to get the process started, and you don't have to do it all yourself. So there are a lot of startup-centric patent attorneys out there who can help you gauge if IP protection is right for your startup. They can take those initial steps, like helping you file a provisional for a very reasonable fee. And a lot of these same attorneys have flexible payment systems that are designed for earlier stage companies. And then there are advisors and organizations like Ideaship that can really help you move past those initial steps, flesh out your IP strategy, finance your patent portfolio in the same way that a traditional investor finances your company on a whole. The key being is that there are set time limits for how long you have to move on IP, and it's worth at least exploring those. You really are not alone, and there's a lot of people out there who provide a lot of help in that area. So my advice is to just explore the possibility as early as you can.
One last question, Ian. Do they need the help of a lawyer, or can they do it themselves?
That is a really, really good question that people will have different opinions on. My personal opinion, having seen a lot of homegrown provisional patents, is it's okay to draft it yourself, do 90% of the work, but you want a qualified attorney reviewing it before you file, in my personal opinion. And the reason for that is because the way that you structure a provisional patent determines what you can get away with when you convert it to a non-provisional. So making sure that you're writing that with some idea of what you want that to look like when you do convert to a non-provisional is very important. And I think something that is worth spending the money on an attorney to have them review it. But, I'm all for people taking a crack at drafting their specification and their claims, if for nothing else but a fun exercise.
Yes, it's their insurance policy, basically.
Yep, absolutely.
Terrific. Unfortunately, we are running out of time, but again, Ian and James, thank you so much for joining us today, giving us your insights about the different competitive advantages of the early stage startups, and hopefully for all the viewers, just hear about this and actually apply it to their businesses. So first, as James mentioned before, you need to identify which ones are your competitive advantage. Second, as Ian pointed out, you need to protect them. And third one, make sure that they are scalable with your business model, right? Evaluating them as a whole. Again, thank you so much for tuning in, and thanks Newchip for organizing this panel. And yeah, I hope you enjoy the rest of Online Demo Week.
Thanks, Fernando.
Thanks, Fernando. Thanks, James. Bye-bye.